Ever wondered how much money you need to live comfortably? Well, you're not alone. It's a question that many of us ponder as we plan for the future. Today, we're diving into a powerful tool that can help make your money work for you. ETFs, specifically a dividend-paying kind called the Schwab US Dividend Equity ETF, or SCHD. By the end of this video, you'll learn not just about the ETF, but also discover 3 investment strategies tailored for everyone, from the aspiring college investor to the long-term planner. Understanding the SCHD ETF. Firstly, we should discuss what an ETF means. ETFs, known as exchange-traded funds, serve as versatile investment vehicles, resembling bundled packages of assets available for trading on stock exchanges, much like individual stocks. Essentially, these funds mirror the performance of a different array of stocks, bonds, or other financial instruments, providing investors with a convenient avenue to access a broad scope of investment opportunities. Dividend ETFs, in particular, focus on a curated selection of companies that distribute dividends, offering investors the advantage of tapping into income-generating assets without the need for individual stock selection. This diversification strategy proves beneficial by spreading investments across multiple companies, thereby reducing the risk associated with the performance of any single entity on the overall investment portfolio. Understanding the Schwab US Dividend Equity ETF. The Schwab US Dividend Equity ETF, commonly known as SCHD, a significant contender with assets exceeding $52 billion. Launched in 2011, SCHD sets out to emulate the achievements of prominent US companies valued for their reliability and growth potential. What sets SCHD apart is its unique approach, eschewing daily managerial decisions in favor of a predetermined formula, selecting companies renowned for their steadfast and expanding dividend offerings. Criteria for choosing companies. SCHD operates on a distinct investment approach, devoid of active stock selection by fund managers. Instead, it adheres to a predetermined formula, allowing for portfolio adjustments over time. Investors in SCHD must place their trust in Schwab's methodology, which focuses on identifying dividend-paying companies from the Dow Jones US Dividend 100 ETF. However, SCHD is particular about selecting firms that exhibit consistent dividend growth over time, considering various criteria such as the company's dividend history spanning at least a decade, its market value exceeding $500 million, manageable debt levels relative to earnings, and sustainable profitability. Moreover, SCHD maintains diversification standards, ensuring that no single company dominates the portfolio beyond 4%. While also balancing industry exposure to prevent over-reliance on specific sectors like technology or healthcare. It's important to note that SCHD's approach emphasizes the longevity and sustainability of dividend payments, reflecting Schwab's commitment to delivering stable returns to investors. While the absence of active fund management may raise concerns for some, SCHD's disciplined investment strategy aims to navigate market fluctuations and capitalize on opportunities for long-term growth in dividend income. Analysis of SCHD performance. SCHD's performance over recent years presents a mixed picture, particularly in comparison to benchmark indices like the S&P 500. Despite facing challenges such as the pandemic-induced market fluctuations, SCHD hasn't matched the performance of the S&P 500 over the past 5 years. However, this relative underperformance could offer an opportunity for investors to enter the market at a favorable price point. Despite its historical performance, SCHD aims to mirror the total return of the Dow Jones US Dividend 100 Index, aligning with its goal of delivering steady returns to investors while keeping low fees. Notably, SCHD has demonstrated resilience in the face of market volatility, experiencing a remarkable rebound of 4.3% since reaching a low point in October of the previous year, signaling its potential for long-term growth. In assessing SCHD's investment appeal, it's crucial to consider future yields and market conditions. Presently, SCHD's forward yield stands at 3.5%, which falls short compared to alternative investment options like US Treasury bonds, offering higher yields due to inflation. Given the uncertainties in the market, attempting to outperform with SCHD may pose challenges. Consequently, potential investors may opt to wait for more favorable pricing and improved yields before initiating positions in SCHD. Stay tuned as we delve into 3 tailored strategies designed to optimize investment returns while minimizing initial capital requirements, providing practical insights for navigating the evolving investment landscape. Dividend yield and future yields. understanding dividend yield is paramount for income investors seeking reliable returns from their investments. SCHD's recent portfolio update underscores the importance of monitoring dividend yield, as it reflects the portion of dividends paid relative to the stock's price. As SCHD undergoes periodic adjustments to its holdings, investors can gain insights into the performance and outlook of individual stocks based on changes in dividend yield. The removal of certain stocks, such as Broadcom and Federal Agricultural Mortgage Corporation, highlights the ETF's commitment to maintaining a portfolio of companies with robust fundamentals and dividend growth potential. While some ousted stocks boasted impressive dividend growth rates, others struggled financially, prompting their removal from the portfolio to make way for new entries. The addition of 23 new stocks to SCHD's portfolio introduces fresh opportunities for investors, with companies like Cincinnati Financial Corporation and Bristol-Myers Squibb standing out for their promising performance and dividend prospects. Despite criticisms surrounding the short-term performance of newly added stocks, SCHD's adherence to a specific formula for portfolio management underscores its commitment to delivering sustainable returns over the long term. By understanding and monitoring dividend yield, investors can make informed decisions about their income strategies and capitalize on opportunities presented by SCHD's dynamic portfolio adjustments. Now we have arrived where we will discuss the dividend yield. Analyzing SCHD's current dividend yield reveals its potential as a steady income generator for investors seeking long-term returns. Despite its current yield of 3.5%, which may appear modest compared to alternative investment options such as business development companies or real estate investment trusts or REITs, SCHD's value lies in its consistent dividend growth over time. Over the past decade, SCHD has demonstrated impressive dividend growth rates with an average annual return of 10.87%. This reliability in dividend payments has contributed to SCHD's appeal among investors looking for a dependable income stream. Furthermore, SCHD's track record of consistent dividend payments spanning 12 years underscores its reputation as a reliable investment vehicle for income-oriented investors. The ETF's ability to provide growing dividends that are also tax-efficient adds to its allure, offering investors a favorable combination of income stability and tax advantages. For instance, an initial investment of $110,000 in 2012 would have yielded an annual dividend income of over $1,400 today, highlighting the wealth-building potential of SCHD's dividend-focused strategy. However, it's essential for investors to consider their individual financial circumstances and investment objectives when evaluating SCHD's suitability. While SCHD's dividend growth prospects are promising for long-term investors, those nearing retirement or seeking immediate income may find the starting yield of 3.5% insufficient to meet their short-term financial needs. In such cases, alternative investment options offering higher initial yields may be more suitable, as waiting for dividends to accumulate over time may not align with their income requirements. By carefully assessing SCHD's dividend yield and considering factors such as investment horizon and income needs, investors can make informed decisions to achieve their financial goals. Investment strategies for every investor. Like I said earlier, I will be showing you 3 strategies, both for the short term and long term, and I'll show you the lowest amount of money you need for each strategy. In respect to that, SCHD presents a compelling opportunity for long-term wealth accumulation with its dividend-focused strategy. Despite its modest initial yield of 3.5%, SCHD's potential for significant dividend growth over time makes it an attractive choice for income-oriented investors. Emphasizing quality holdings and steady growth, SCHD offers accessible pathways to wealth accumulation for investors at various stages, including college students. With its focus on reliable income streams and long-term growth potential, SCHD stands out as a promising option for sustainable wealth generation. To determine the amount needed for retirement, it's crucial to assess current expenses. On average, individuals in the U.S. spend about $3,400 monthly, totaling $40,800 annually, covering essentials like housing, transportation, food, and healthcare. However, considering inflation, which has increased prices by approximately 2.65% annually over the past decade, future expenses could rise significantly. Looking ahead 30 years, expenses might inflate to around $7,000 monthly or $84,000 yearly, underscoring the importance of planning for increased financial needs in retirement. Year 1 Goal Strategy. Year 1 Goal is the first strategy that is aimed at achieving the lowest investment required to receive dividends from the outset. To calculate this, we simply divide the desired annual return, in this case $40,800 or $30,400 monthly, by the current dividend yield of the ETF, which stands at 3.5%. For SCHD to start receiving dividends immediately, an investment of approximately $1,065,714 is necessary. This amount would yield an annual dividend of $40,800, meeting the monthly income target. However, it's important to acknowledge that such a substantial investment may not be feasible for most individuals. Future Retirement One-Time Investment Strategy. Now to the second strategy, which is Future Retirement One-Time Investment Strategy. This approach focuses on making a single investment to secure retirement income down the line. Consider the scenario. If you have 30 years until retirement and aim for $7,000 monthly or $84,000 annually, we employ a specialized JMA calculator. This tool leverages the initial investment, projecting growth based on the average annual share price gain and dividend rate. The reinvested dividends contribute to the year-end new balance, with subsequent years factoring in dividend growth. For instance, John would need to invest approximately $25,000 in SCHD. After 1 year, this investment is projected to reach $27,740. Over 10 years, it's estimated to nearly triple to $74,500. And by the 30-year mark, it's poised to soar to an impressive $1,819,000. This substantial growth yields an annual dividend of $81,073, or $6,756 monthly. Overall, the ETF's performance contributes $1,156,157 from the rise in stock value and $533,000 from reinvested dividends over the years. Monthly Retirement Strategy. Considering the substantial initial investment required for Strategy 2, let's get deeper into a more accessible approach for those with limited startup capital, and the strategy is called the Monthly Retirement Strategy. This method allows individuals to gradually build their investment over time through monthly contributions. Here's how it works. With an investment of around $225 each month, totaling $2,700 per year, you can embark on this journey. Over a 30-year period, the projections are promising. Starting with an investment valued at $5,695 after 1 year, it's expected to grow to $54,900 in a decade and reach an impressive $240,127 by the 30-year mark. With consistent monthly contributions, John's investment is forecasted to culminate in a valuation of $1,677,000. This yields an annual dividend of $84,458 or $7,038 monthly. In summary, the ETF not only rosters a significant rise in stock value, contributing $984,623, but also generates $51,470 from reinvested dividends over the years. Conclusion. Understanding ETFs like SCHD and employing strategic planning can significantly enhance your financial stability. Today's insights are just the beginning. Stick around for more tips and strategies to grow your wealth effectively. If you're ready to take the next step, check out our next video on how to turn your investments into a substantial nest egg.